for AML Conversations. Sarah Beth, as everybody knows, is the author of the Dirty Money Weekly, and also a very long accomplished career AML professional. We really appreciate the opportunity to get her take on what's gone on in February. So we're going to look back a bit, maybe have some comments about the next month and what it might lead to. But Sarah, let me start with this. You wrote a pretty extensive piece in your most recent edition of the newsletter, and you looked at the Epstein files from this perspective, the financial transactional aspect of it, and what it could mean or should mean for banks going forward. So without talking about specific banks or anything related to the issues that the media has been covering, I think it's important that we say, now that the federal government, the OCC and the FDIC, and particularly the Fed, since they just announced it today when we go to record, that they want to formalize the elimination of reputation risk as a consideration when you're looking at financial institution issues. How do you manage something like what Epstein has showed us over time? So I know that's a lot there, but basically give us a sense of, we urge folks to read your piece. What are some of your recommendations for AML professionals going forward?
Well, thanks for having me back. So I think, I took quite a while to say anything about Epstein. I know that the last couple of weeks, the news has just kind of been consumed with everything. And I took that time because I want to make sure that my comments are valuable and, actually moves the ball down the field. Because I feel like we get stuck in the past, and I'm not. And when I say that, I don't mean that what happened and the victims that we should move, that
Right.
we should forget about that, right? In no way, shape, or form am I saying that.
Of course.
But I feel like for every one Epstein, there's dozens more men and women like him who we aren't finding because we're stuck looking backwards. And so part of what I tried to do was kind of give people some starting steps. I know the world of adverse media screening and negative news screening, most banks under 10 billion, most credit unions under 10 billion in assets, they don't really do that, right? They kind of look at that process and go, I'm not going to do that. I may or may not Google a customer or a member's name within the bounds of a high-risk customer review, but I'm not going to go pull adverse media as a whole. And I know some of the tier one banks do that. And for me, that's important contextual information that should have added to the view of somebody like Epstein and any Epstein Jr. that we would see from there. Not that every single person who is indicted for soliciting from a minor is automatically going to be an Epstein, but given the other information, the funds flows that happened, the parties involved, the pop-up shell companies, the charities that magically appeared throughout the history of Epstein, I think, and I know happens in community banks and banks under 10 billion today. I see it with my own eyes, but they're missing that piece that pushes it over the edge. And that's that negative news piece. And I feel like for a long time, they just kind of like, I don't want to know that, but that is a lens by which you view that activity differently. And so that was kind of the purpose of my writing, was trying to get people to see the value of being more proactive and getting some of that contextual information about the customer.
What's interesting is with the lack of focus on reputation and the similar focus on suggesting, because I don't think it's true in my opinion, that the de-risking or debanking that's been accused by several in the administration was done for political or religious purposes. So given all of that, so there's obviously there's definitely some focus on what a bank decides. But again, from a practical standpoint, given what you just said, what is a compliance officer supposed to do? You're supposed to be paying attention because those accounts could be problematic. But given the fact that you're going to get pressure not to exit a relationship, this has to be one of the most confusing times for an AML professional, whether you're at a community bank or a large multinational, right?
Yeah, no, I definitely would agree with that. It is confusing, and I think, I got several direct messages as well as some comments on my post, talking about the debanking EO from bankers. So they are confused as well, right? You're damned if you do, and you're damned if you don't. And that's the frustrating part, and that's for me where, I try to remove the political climate that we're
Sure.
in,
Mhm.
and just see, all right, my job as the board appointed a the B sorry, the I can't even talk. AML officer. I want to say Bank Secrecy Act officer, and I switched terms. Sorry.
Yep, sure.
But huh? I know.
That,
It's like, wait, which term am I supposed to use here?
that's why
But
this
as
is
the
a
board,
conversation. We're having
right?
coffee, and this is what we would
I
do
know.
having coffee.
And
Yeah.
I am having coffee, and I've had 2 sips, and clearly not enough. So part of, I think, the role that we have to take is, all right, this is, this is what is required of me, is to find suspicious activity, see it clearly, report it in a timely manner. Now, the exiting part is really where that debanking EO makes it super muddy, right? And as far as exiting a relationship, I can't speak to that. There's so many different things that come to mind when you go to exit a relationship. But as far as our most immediate purpose, which is to find suspicious activity, report it in a timely manner to our law enforcement partners, that to me is the thing at hand. That's the next right thing to do. And so that's where the EO on debanking, the reputational risk stuff, it's not it it's very confusing. So if we take a step back and go to the step that happens before we even think about getting rid of a customer, it's going to be performing a proper um, uh, OSINT style negative news, and then filing a SAR if needed. And that's the step I think a lot of people are kind of skipping over, and they're going right to the debanking you. Well, yes, but there's so many things in the middle that could actually help us find the next Jeff Epstein.
Let's shift gears a little bit. FinCEN issued well, they did two things. One, they did a week or so ago. I want to make sure we cover that, and that's provide what they call exceptive relief under the CDD rule. Talk a little bit about what that was and how you see that, again, from an operational and practical standpoint going forward. Then we'll mention the most recent advisory that they just issued the past today, actually, as we're recording this. But talk about the CDD relief one, what it is, high level, and what your thoughts are about it.
Yeah, so exceptive relief. I think it's a great effort. I applaud FinCEN for trying to bring relief in some, areas of our regulatory framework that needs some improving. So I'll start out positive. But it's not really so much of a relief. I mean, well, one, it bothers me that we talk about regulatory burdens for community banks, and the first thing on the block is uh, our area, right? That's the first thing that just gets me. So if I were to move past that, look particularly at this, part of what they're saying brings relief, actually muddies the water again, and actually makes it more complicated for banks to take a true risk-based approach. And I know the term risk-based approach is super overused, and everyone throws it around like it's their get out of jail free card for not doing something. But a true risk-based approach starts with the threats and vulnerabilities type of assessment, right? Look at threats and look at vulnerabilities, then you move to your risks. Well, if you find in the process of looking at your financial institution that your threats and your vulnerabilities really require you to keep up to date on beneficial ownership changes, then they've actually made it harder for you to do so in this exceptive relief. And that's the frustrating part. Like, the longer I sat with that and tried to play it out in a day-to-day scenario, I see a lot of banks having to add another process, a new information gathering data thing that they're going to have to go put into place in order to actually take a true risk-based approach, which to me is a deterrent to taking a risk-based approach. Most financial institutions are now going to be like, well, I don't have to do anything regardless of what their risk state. So, to me, it's not really a relief if you truly want to deploy a risk-based approach.
That all makes sense, and I'm not sure everybody appreciates that. I think you make a good point that FinCEN is attempting to reduce burden, but you have to think about all the context and adjacencies as you do that. Another one, as I mentioned, as we were recording today, FinCEN rescinded their advisory on what they're calling the abuse of citizenship by investment program that was sponsored by the Federation of St. Kitts and Nevis. Um, talk a bit about that, and again, what does it mean, big picture?
So when this came up in my email this morning, my first thought was, timing on this is funny, because now, while I'm sure they had their own reasons, the optics, which perception is reality, the optics of this, it's not great. 11, 12 years ago, we published this document that they're now rescinding, and we said citizenship by investment, citizenship by investment. That's a mouthful.
Buy your way in. That's right.
Yeah. Is higher risk. Now, if you look at this particular one, and I do remember when this one came out, it was talking about people from Iran who were coming to St. Kitts and Nevis, and they were getting their golden passport, if you will. Now, what's interesting is that the dollar amounts, the dollar thresholds that a former person from Iran would have to invest into the islands mirrored what we've long considered in our EB-5 program that we've had for decades, and nobody ever talks about EB-5. So
and EB-5 is what?
That's a type of visa where now the old thresholds that we had were about the same as what St. Kitts was allowing. Now we've increased them. I think it's $1 million now. You have to buy you got to buy a business, a failing one, or an existing one in order to get an EB-5 visa. And then now I think it's up to 5 members of your family, right? So there's some similarities that we've had in our EB-5 program. Well, now under this current administration, we now have actual real golden passports being offered. So the optics of it to me mean that we're now stepping back from our long held statement, or approach rather, that citizenship by investment is higher risk, and now we're stepping back and saying actually it's not, because now we ourselves are offering that. And I just felt it didn't land the right way. Now, of course, if you look at the timing of things, I'm sure that the reason why they put this out, I would hope, if I'm giving them the benefit of the doubt, the reason why they put this out is because the passports issued have now run their course. They're no longer valid.
Right.
So, that's probably their reason for it, but the optics of it, because we now offer a golden passport, doesn't look great.
Yeah, and we talked about this before we recorded. It reminded me that we actually at RightSource did an episode of AML Conversations back in 2023, and this was April of 24. This is when FATF and OECD issued a joint report on residency and citizenship by investment programs, talking about the high level of risk that pretends. And this report came out in 2023. So the 2024 interview was about that report, and clearly the experts on the panel, but also in the authors of the report, plus FATF and OECD, said very high risk, this particular area, for money laundering, terrorism, and other issues. So I'd urge folks to go back and listen to that conversation, or simply go on the FATF website and look at the report from 2023. But that struck me, to use your words, because I agree with them, the optics aren't great, obviously. Yeah. So I think that's important.
Yes.
All right, let's shift again. This one is the IRS CI, I think, always does tremendous work, but they've been recently, in the past number of years, have issued a annual report on the utility of BSA data and the utility of SARs, CTRs, all of that. Guy Fico, the IRS CI chief, who we are going to honor in our March AML forum, partnership forum that we're going to have here in Washington, D.C. We're going to honor Guy for his tremendous work leading CI. So he has posted, and obviously IRS has posted that separately. But if you follow Guy on LinkedIn, he's posted the most recent stats and statistics there. And I'm going to turn it to you in a second, but I want to mention a couple things that he highlights in his postings. He said nearly 89% of the investigations by IRS CI had BSA filings associated with the primary subject. Remember, they're talking about potentially increasing thresholds. So that's a valuable data point for those that are looking at that. Nearly 80% involve SARs, 67% involved CTRs. What are some of the other things that jumped out at you about the report?
Yeah, so the median cash in and cash out was like the thing that I kind of laser focused on. The fact that they were about 12,000, I forget which direction, and then one of them was like 12,000 and change. That's the median cash amount. So if we're talking about the thresholds, which we talked about, I believe on our last one, about those being raised to 30,000, I mean, imagine what it's going to do to the casework that these agents rely on. I mean, it's not. To me, this is well timed. It's well thought out. It's digestible for a banker. It's certainly digestible for our law makers as well. And I feel like, in a way, they are holding themselves accountable to how they use all of the data that banks and financial institutions send to them. And I love that. I wish other agencies would take note. Because, as a banker, when a banker reads this, I go, wow, it actually matters when I file a $12,500 CTR, right? Somebody's actually doing something with it. And I think that's one of the biggest things reading through this is that the general tone of it from top to bottom, I believe it's only 2 pages, is that the data matters and that this particular agency is actually using it. So I would say for traditional financial institutions, specifically when you're reporting to your board this month, this type, just take snippets from it, and you should put this in your board report, especially if they're part of the financial institutions that are lobbying for higher thresholds for the 30,000, right? If your board are the ones that are talking to different lobbying groups and saying we need to up it to 30,000, there's data in here that can help make the case that it's actually really important that we don't mess with those thresholds. So yeah, I mean, Lauren Core and Guy Fico and their team just churning out incredibly useful data for people to look at and go, what I do matters. Thank you for telling me that. It's great.
Yeah, and everybody should take a look at that. It's a really good training tool too
Yeah.
for all analysts of any level, from entry level to obviously those that lead teams. I think there's valuable information there. And to your point, it is going to become an interesting debate as we go forward if Congress does continue to pursue the threshold increases, because I don't think outside of suggesting that it's going to be a burden reduction, they don't really understand the forest from the trees there. It may be, and I know that some small banks have told me it will be a reduction, but I've also heard others say that, yeah, it might, I might lose like half a staff to this. So it's not going to be that much of a resource reduction. Plus, obviously, if you're going to be considered adequately risk-based in terms of looking at account activity, higher thresholds only means you're going to have to pay more attention to potential structuring. So we'll see what happens with that.
Well, and I think there's other things we could have done if we wanted it to bring a regulatory relief of sorts. Just raising the threshold isn't going to do that. The thing that's the biggest time suck for banks when they're filing this is the aggregation piece for the customer and the on behalf of. That's the biggest, like, just of time is that it's trying to make sure, oh, well, this person on this account, was it in, was it out, oh, should I add them, should I not? That's the biggest piece that they could have easily simplified and said, hey, you know what, we're going to keep it at 10, and if there's a single over 10, we want to see it. Here's a stripped down one pager of a CTR. That's what they should have done. But instead they're still leaving the biggest time issue, which is aggregation. That's the biggest issue. So
we shared this information on text chains, and it's not a proposal yet, but I thought maybe we'll end with a quick conversation on something that we've heard is being considered, but there's no evidence that this is official. But I would be curious of our listeners' viewpoints on this, and that is what we have heard is there is the potential for a proposal or executive order, who knows in what fashion it's going to come out, that banks would be required to assess the citizenship status of their customers. Yeah. Doesn't say simply going forward, so it could be retroactive. Obviously, we don't know if this is a notice of rulemaking, an order, what have you. Obviously, a lot of other things would have to happen. But just given that, what's your initial reaction to that if that were to come to pass?
When I first heard that rumor, I kind of thought, well, we kind of already do this. Like, who are they talking about in the bank? Or, who are they talking to in a bank? Because anyone who's opened up a new account for a non-US person knows that non-US person typically has some type of indicator, whether it's in the format of their TIN or if they don't have a TIN, that they might be a non-resident alien or a resident alien. Or maybe even not an NRA, and so they don't have a TIN. And, we've had W-8 bends for a long time. And now, W-8 bends are not absolutely required across the board. They're only required if you're in an interest-bearing account and you're the primary owner. So it's not that every non-US person will have a W-8 bend, but we already do this kind of in part. We just don't have a box that we check to say citizen, not citizen. And I think there's other things that they really have to figure out before we start requiring this. I mean, this is going to make, I don't know how many fintechs that I know of just off the top of my head implode because this is something you have to structure your core. I mean, these are major changes to the core that would have to happen, and then also major changes to the UI of the fintech, as well as all of the agreements governing all of this. I mean, this is not just a simple change. There are multiple layers, not just the data and fields and coding and all that kind of stuff, but also, okay, so then we collect that. Are you requiring us to do something different with that? Right. Are we supposed to assign a high-risk customer rating to it? Like, I mean, there are other things. Is it just purely a data collection and the government wants to know? Like, I'm sure, I'm not a lawyer. I'm sure there's considerations for that, right? Just freely passing information to the government. I don't know. So I feel like if this rumor is true, that they need to be talking to people who are actually new account specialists in a financial institution. They need to be talking to these fintechs that are specialized in providing banking services to non-US persons, because this has a broad brush impact. So
what a concept, actually talking to the bankers that do the work.
Right.
That reminds me, I'll let you go in a second. Way back when, this is when the Undersecretary of Treasury was a gentleman by the name of Ron Noble. And Ron, when he took the job, one of the first things he said was, I got to figure out how all this works. And he actually spent a day in a teller cage in a bank to see how bankers handle things. In the banking industry, we're so happy to see. Now, you're not going to learn everything in one day, obviously, but the fact that, and it wasn't like they brought cameras in or whatever. He just called up one of the banks and said, hey, can I come take a look at how things work? And so I think that adjusted some of his policy thinking. And, I think that's something, obviously I remember that, and that's probably 30 plus years ago that happened. So I know that those sort of things can be done, but anyway.
Just having different lobbying agencies do that, right? Because what they do is they reach out to the CEO, right, or to the board, and they aren't talking to the operators, right? Whether it's compliance or not, they
Sure.
aren't talking to the people actually boots on the ground doing the job. And I think that's the gap that's missing.
Yeah.
So, if I had my magic wand,
Yeah.
I would be getting all of the lobbying groups out into the branches. Like, look, this is what this one little change is going to do. And that would slow things down, right? I mean, even this CDD, exceptive relief, would have probably slowed down a little bit or been edited to actually be true relief if they would have talked to a person who's collecting and using the UBO data. But they didn't. At least it didn't seem like they did. I do not have knowledge of whether or not they did, but it's not written in a way that makes it sound like they actually talked to somebody. So.
Sarah, plug your newsletter. How can people subscribe?
Money Weekly. I started posting it on Substack, but that's just for habit. But it's on LinkedIn. I publish every Monday morning, try to get in before 11, and it's just the week prior. So you can subscribe there, and I try to always give to-dos. It's a lot of opinion, but a lot of things to do.
No, and that's what I think everybody appreciates about it. Thank you so much. Look forward to connecting back with you in March, and I know we'll see each other at the Puerto Rican Bankers Conference this week, so I'm sure we'll pick up some good information on other challenges that our industry continues to face. So thank you so much today, Sarah.
Deal.
Stay safe. See you soon.
Thanks, John.